we've been doing payment plans in the space for a long time, or installment payments.
Yeah.
And now are we just calling them fancy names like buy now, pay later, or are they actually separate things?
I always get a little concerned when I get that email. Hey, yeah, you still got something in your cart.
Yeah.
You still want to buy that?
Well,
they're like,
know.
How do they know? I was checking out as a guest.
I think that the emergence of surcharging is bringing back some of the old favorites like ACH.
Welcome back to the Lessons for Tomorrow podcast, the motivational poster in your ear. I'm your guest host, Joe Campagna, payments consultant at AmericanEagle.com. In this episode, we're going to be diving into the world of payments. To discuss this, I'm joined by Trey Swallow, SVP of Strategic Partners from Nuvei. Trey, thanks for joining us. Quick intro about yourself.
Thanks for having me, Joe. Appreciate it. And to the wonderful folks at American Eagle. So as you mentioned, SVP of Strategic Partners. What that basically means is I handle any of our payment partner relationship in the U.S. for my company, Nuvei. Nuvei is a long-term partner of American Eagle. Happy to support you guys with your payment needs and happy to be here to talk shop with you today.
Looking forward to it. So our first topic today is the surcharge shift. It's something we've seen here where a lot more people are considering it. I feel like a few years ago when this became more of a opportunity, a lot of businesses shied away with it and were nervous, but now they're realizing that everybody is kind of going after this and we're seeing more questions and shift to it. How are you guys seeing that at Nuvei?
We're absolutely getting more questions about it and thinking and talking through the process with our particular partners. But yes, a lot more interest, a lot more people wanting it as part of their solutions for go forward.
So for the surcharge part of it, there's a lot of people that just add it. How does it work compliantly and correctly?
Well, great question. Because if you're not compliant, you don't pay attention to the regulations, the regional state regulations, you're going to get in trouble, right? So compliantly, there are caps to how much you can charge. It's only allowed on credit cards, not on debit cards. It must be clearly disclosed at checkout. And that's one of the biggest things that gets people tripped up today is they just see it on the receipt or they find out about it later and didn't know that they were getting charged. So the clear disclosure is a major aspect of being compliant with it. And then, of course, if you happen to be in a certain state like Connecticut or Massachusetts, they have a ban on it completely. So understanding where you're at, what the cap is, how to clearly display it, and making sure which cards you're charging, those are the main things we're watching out for.
I think it's interesting as well is it seems to be everybody thinks it's pretty straightforward, but there's actually a lot of nuance. There's, regulated debit, unregulated debit. So for most people, you can't charge on those transactions any sort of surcharge. So for businesses that are doing this, do you think this is something that's sustainable in the long term, that we'll see this continue to grow as a part of the credit card processing, I guess, ecosystem and shift?
I think it is. I think that you're going to have providers like Nuvei or other payment processing providers in the space put forward compliant solutions. So the compliance is not necessarily on the merchant or on the software partner that the merchant works through. I think it's going to continue to be something that we're going to experience. I have a friend locally back home that owns a appliance store. And his single largest line item on his expenses are the credit card fees each month. And I think for small business owners, I don't think that this is going to go away anytime soon. I think the more people get educated about it, the more they learn about it, the more they're going to want to offset those expenses that come in just for business as usual, which credit cards are nowadays.
It's funny, like when it first came out, I feel like most businesses were like, I couldn't possibly. Yeah. And there, it's like they had this fear that all of their customers would abandon them. And they realized that, in my experience in the last 5 or 6 years, I always joke with clients, I'm like, nobody's gone out of business who decided to do a surcharge. And in the B2B world, I almost feel like they should give a hat tip to the retail side, because people walk in now and you see, either we're credit card only or we charge a 3%. And, now that's become more in the mindset and people understand it.
Well, I think you're right. I think one of the great things that great things, relative when I say great, but I think one of the things that happened in this space was COVID, that where people were just ordering stuff in and people couldn't get tipped when they were in the restaurants. And then they thought about adding these surcharge fees on top of it so they could recoup some of the costs that they were losing from in-store stuff. And for the consumer being hit with these fees during COVID, they didn't care as much. They wanted the convenience of it. And so it just became a little bit more normal. And that was the biggest thing. You mentioned it. The merchants were scared of their customers, giving them crap about passing along those fees until we had this big thing that happened. And suddenly everybody became a little bit more acceptable to the process.
Yeah, it's funny. I always tell the merchants, because they always say, why is this one of my biggest expenses? And in the US, somebody's got to pay for the points, and it is the merchant. That's where it all ends up coming from.
Well, let's stay there for a second, because I think that's an excellent point. And I think the consumer who's getting ticked off about having to pay the fees doesn't equate that back to the 5 different rewards cards in their wallet or how they're trying to string points together for their own benefit.
Absolutely. I mean, they want to go on their vacation and they think it's free when as I learned a long time ago from my father, there's no such thing as a free lunch. Somebody's paying for this. And that's where the merchants come in. And it also helps explain to them, like, why am I paying more for this card or that card? It's like, because they get a lot more points and they get a lot more benefits, and they get a concierge who picks up the phone and says, "Hi, Trey, how can I help you?" versus 1-800, "Please help me now."
Yeah.
But yeah, I think that's, yeah.
I can get access to airport lounges for my Chase Sapphire card now.
Right.
I mean, it's the perks and stuff that keep getting added on top of it are amazing. I know when I first started in the space, I've been in the space 14 years now, but when I first started in the space, somebody came to me and said, "Hey, we got to work through this average effective rate for this client, figure out what they're being charged across the board." And I said, "Well, they're just charging 3% and 30 cents. They're like, "Yeah, but did you know that there's like 71 different types of Visa cards with different effective rates on them?" And I said, "No, I had no idea." Right. So I think the average person just has no clue about the type of card they're just choosing because of the benefits, but not realizing that that card costs more. And to your point, somebody's got to pay for the points.
Yeah. And it's funny you say that. Like, it was probably around 70 for Visa 14 years ago. Across Visa, MasterCard, Discover, I would say it's closer to 1,000 or more to interchange categories.
Yes.
It's insane.
Yeah.
I think another aspect of this is, when clients are worried about it, I always tell them, listen, they can pay you other ways. They can pay with a debit card where there's no charge, because that's a cash transaction. They can write you a check. Yeah. They can pay in gold bullion, however you want to get paid. Yeah. Like, you're not telling them you can't pay me. No. If you're going to do it with a credit card, you're going to pay a little bit more, and we're going to add it on correctly. Yeah. I think is the biggest thing, is to stay compliant.
Absolutely. And I think that the emergence of surcharging is bringing back some of the old favorites like ACH. Which has been with us for a long time. And I'm sure my ACH boys at Nuvei would love that I'm giving them a little bit of a shout out here. But I think with the emergence of this, your lower cost options, ACH being one of them, especially in a card not present environment, is becoming a much more viable option. We're seeing ACH transaction rates and volume go up as a result of some of the surcharging. But to your point, right? They don't have to pay with their rewards card. Right. They can pay with their debit card, cash, check, or online with their ACH card.
Yeah, and I think that goes back to your point of you have to let the consumer know that this is coming. There is a 3% charge. That is the maximum. You can't charge more than that. That is written in gold and standard by the card brands. But the biggest thing is the client has the decision to go, okay, I want to pay that 3% and I'm going to, eat the cost and deal with my cards. Yeah. And then, if not, I can always pay with a debit card. I think the frustration for me is you run into technology or places where it is more than 3% or it is done incorrectly and I'm paying this on my debit. And that's where I, being an insider to the industry, get very annoyed, but I'm tilting at windmills probably.
No, but I think it goes back to the compliance and just the overall education of the individual consumer, right? Yeah. The cap is 3%. If you're being asked to pay more than that, then you're at a place that's not compliant with the rules and regulations. So the education of understanding how you benefit from the points, how you get this surcharge, why it's charged, what the compliance are, I think that just makes you better equipped to learn how to spend your money and deal with these credit card items.
I agree. And in this sense, I think if someone is out there looking to add this to or make a change toward this business model, please make sure that you're talking to a professional who is well-versed. Because if you do this incorrectly and the card brands find out, there are penalties. They will come to you as the business. They're not going to sit at the processor level or whatever. And no one wants to have that penalty or that letter and freak out and then have to change everything again. So I think the biggest advice is learn about this if you're going to make that change. Make sure you're doing it correctly, but really work with someone you can trust and find out exactly how to do this the right way.
Absolutely. Couldn't agree with you more.
So another big topic, especially probably more in the B2B world, is the changes to level 2 and level 3 cards. These are transactions that are coming on Visa and MasterCard specifically. And on these transactions, businesses are supplying additional points of data to receive a discount on their interchange cost. So if the cost was originally 2.7 on the interchange, that is what Visa MasterCard mandates. By entering this information absolutely correctly across all data points, you'll potentially save, 60 or more basis points and get that down to 2.1. It's a massive savings. It's been something that I think 5 years ago, all of a sudden really came into the fore and most clients got excited about because the savings were huge. But in April, Visa came out and made a little bit of a change. And they added a cost because they wanted to make sure they got a little bit for the level 2, level 3, and they added a flag. But Trey, can you walk us through a little bit of what happened in April and any expectations for what's going to happen in October?
Oh man. Okay. So
it's a big piece. I know. I just teed up a massive I feel like the old 96er just got put on Trey's plate.
We struggle to work through this, but we'll give it a go. All right, so with the changes to level 2 and level 3, level 2 being the passing of tax and sales tax information, and then level 3 being the passing of product information on eligible commercial cards across some very specific interchange categories, MCC categories. And so what the change kind of was is they're pretty much, for the moment, they've attacked their scheme fee onto level 2, level 3, and large ticket items. Coming in October, Visa will be doing away with level 2 entirely and just sticking with the level 3 program that's going to replace kind of consume level 2 into it, as well as the requirements around the data.
And the benefit to that actually is that level 2 is a little bit less of a discount. So if you're doing level 2, you send a little bit more data, you actually will get a bigger discount for level 3.
Yes. So when we talk about the changes, some of them are pretty beneficial. You're going to get access to something that you couldn't get access to before. The kicker here to most of us in the industry is being able to pass the correct amount of data through. Just as we were kind of talking about surcharging, of knowing what you can and can't put through surcharging with regulated debit cards and unregulated debit cards and all of that charge. In fact, you got to know what you can do with this. So a lot of the space in level 2, level 3, a lot of the processors or partners were enhancing some of that data to make sure that you did qualify for level 2 and level 3. Part of the big changes is Visa is coming out with a verification flag. That means that you're actually providing the right data in the level 2 or 3 positions to pass on to actually qualify for it. And that data is specific to your business and to your products and to what you're actually doing. And that's kind of how you get your verification mark, is they're going to monitor it for 2-3 month span. So they say right now. And then if you pass that verification, you passed in all the data correctly, it's really applicable to your business, it's not generic, then you can become verified in the system for level 3 and kind of take advantage of the options there. But understanding the nuance between just providing general information to level 2 or level 3, which a number of providers are doing today, to very specific information, has a lot of people in the space a little bit nervous coming towards October.
Yeah, it feels like, like a year ago, was it a year ago Visa made the change to 3% on surcharge?
Yes.
So Visa and MasterCard, Amex, Discover, the card brands make changes in large decisions in April and October. Twice a year, They come together, they do it. There's maybe some subtle ones throughout the year, but those are really the two big times where you might see a shift. And last year it was surcharge 3%. Visa decided to give everybody that heads up in like February. And that was not easy for the processors, because if you have a program in place and you have to make these massive changes as of April 1, you're literally asking to move a mountain.
Yes.
And they got there, but it was very quick. With this one, there's a lot more nuance. And they started a little bit in April. The rest is going to be in October. I'll be curious to see how that goes, and how easy it is. And again, I think the biggest part about this is that if you are doing level 2, level 3, do you think you're doing level 2, level 3? You need to find a partner that's going to help you make sure that the data is correct and can help you with this verification, because that's a new layer that wasn't there before. Because if you're not verified, you're not going to get the benefit. And that's one where you got to know, am I doing it correctly? Because Visa is communicating that to the Nuves and the other processors of the world. Is your processor communicating that to you?
Yes. So they've given us so Visa's given us some standards to say, hey, this is too generic. This is what we would like. So with their level 3 data points, they basically said, here's examples of, here's generic, this will not pass. This needs to be more specific. This will pass. So working with, as you mentioned, partners that understand that space, that can strategize and consult with you to make sure that your front end systems, right? So as we mentioned, I'm the SVP of Strategic Partners. I'm working through software partners, right? So we're advising on all of the level 3 changes. And then the software partners is having to make sure, one, that they're actually collecting that data in their software up front. Right. So there's 2 points of pain with this new change. Is the software itself has to change. And then we have to make sure that we're validating as the processor and the gateway to the rails, validating that is indeed the actual data that should be passed through, so we can see the interchange qualification that we want to see.
Yeah. And this is really affecting the B2B place, right? It's very rare in B2C. You might see some. And if you're not sure, if you're like, I don't even know what Trey and Joe are talking about, just ask the question or take a look at who you're working with. Because if you're doing a decent amount of volume, a few $1 million a month, the savings on this can really add up quickly, and it can become thousands of dollars. And it's all about entering the data correctly.
Entering the data correctly. It also has a lot to do with, once again, you don't know what you don't know till you ask partner. But especially if you're in the B2B space using commercial cards, corporate purchasing, business credit cards, whatever it is, this is going to be right up your alley. So if you're not realizing the savings today, look for an American Eagle or a Nuve to partner with and make sure you can take advantage of it.
Yeah, it's an interesting program. It does, like I said, it doesn't affect everyone, but if you can, at least ask the question, and see if this does, there could be considerable help to you. And Visa takes, and people may be asking, what does Visa do with the data and MasterCard? Because it's just those 2 card brands. They're using this for marketing purposes and to really understand how people are buying and what they're doing, and understanding, certain trends in the markets. And this is one of those points that they do that with. So there is value to it in that regard. I don't think October is going to be the end. I think there'll be maybe a little bit of adjustment, because it is incredibly complex. It's like government comes out and makes a law and you're like, whoa, we need to, this, what are you doing? Like, this is one of those where the change, whether you right or wrong, is not going to be easy. So I think, we'll see where it goes in October. There might be some more nuance for April, but any thoughts on that, Trey? Or do you think they'll have it figured out by October?
Yes. In terms of this first edition of it, I think it gets determined by October, but I think it gets revised as we go forward, because at its essence, right, this is a revenue play for Visa, right? So they're making sure they have accurate data that they can resell into the market space.
Yep.
Right. So I think they've run into a problem where they've got some dirty data because of some generalizations that are passing through the system today. And they're running into some trouble with that particular data.
Yeah.
So as they fine tune that data, and we happen to be in this age of data right now with AI and everything else, right? They're going to see how valuable accurate data is, and then they're going to pivot from there. right? So did this work? Did they get what they want? Could they resell that? Could they get the revenue on the other side of it? Or are they going to get enough revenue through the scheme fees that they just applied to it, right? And then we're going to have a second iteration of it. Do we need more data? Because data is so valuable to sell by Visa wherever it sells it today, right? So maybe there'll be, more fields qualify for it, more things to collect. And, given the amount of reduction, they may add some additional scheme fees as we go along. But I think as far as October is concerned, I think we're set for October. But I would double down. We're going to see some iterations on this in the next couple of years.
And I think in the long run, not having level 2 be there will make it easier, because between level 2 and level 3, there was definitely confusion.
Yes.
Especially on the same filter. So like for tax, if you had one number in level 3 that counted, it didn't count in level 2. So it was just, I think this cleans up the process a bit. It gives the full benefit now. It's not a partial, or it's not a little bit for this one and more for that one. It's a one standard, which I think is better. The question is how do we get there, and making sure that the new standard is something everybody can get to?
Absolutely. Yep.
Again, on this one, especially if you have questions, much like Surcharge, this is really in the weeds on credit card processing. Find someone that you can trust that can work through this and help you with it. I think is probably the best advice.
Mm-hmm.
I'm going to shift now from getting into the weeds.
Yes.
To buy now, pay later.
Oh, okay.
This is, I feel like this is me on the porch screaming at children. I don't understand buy now, pay later. I get it. I understand it's paying for, it's all of these things. But then you hear that people went to Coachella over the summer, or whenever that concert is, because again, I'm old. I don't know when these concerts are. And they bought their tickets and paid in 4 because the tickets were so expensive. It was so expensive, I couldn't normally go, but I'm going to split that in 4. So we're still seeing this grow. But for you, Trey, I mean, the stuff that's out there, what are you guys seeing in terms of, is it economic pressure? Is it choice from the consumer? Where are you guys seeing this BNPL part fit in?
Absolutely think it's economic pressure. And I love that BNPL, buy now, pay later, to me is just a fancy new name for rent to own.
Yeah.
All right. The rent to own place has been around forever, right? And we haven't gotten rid of those yet, right? You want a new couch? You can't buy it outright. Let's 4 easy installments. Let's go. We got a new couch or a new TV.
I was joking with you this morning. There was a guy on Instagram who posted he finally paid off his Costco hot dog at 37.5 cents over 4 payments.
Yes. Well, I think therein lies the problem I have with the buy now, pay later space is I think, it's always going to be there, whether it's rent to own or buy now, pay later. Somebody's going to try to break up a big purchase into smaller payments. The old layaway system, right?
No, layaway was different.
Oh.
Layaway stayed at the store.
Oh, that's
and it haunted you from whatever shelf until you paid.
It's true.
And then you got it. That's how old we are, Trey. I remember you're like, oh, it's on layaway. If I can get 2 more payments, I can finally take home Battleship and play with my friends. Now you get to take home Battleship and 90 other games over 90 purchases.
Yes. Well, we're a gratification society. We want it immediately, but I'm sure that guy that just paid off his hot dog is not appreciating it as much as he had to wait for it.
True.
But this isn't new tech to me. I mean, it is in this particular space, is you just divide it up and it makes it so much easier. But that's the problem with it, is the safeguards around it today. Is there a price point where you don't buy now, pay later below that particular price point, right? Does it even make sense? How do the buy now, pay later companies make money off of those, right? Are they doing it interest free, or are they increasing the price? And is there transparency around that when you're actually going to choose that option? And is there any transparency in the industry at all to know that I just wanted to go back to school shopping, and I've got 3 kids, and that's a large bill.
Yeah.
If I got to get shoes or clothes or backpacks or whatever, and then before I know it, I'm just buy now, pay later 17 items across the next 6 months, and there's no regulatory committee that is going to even
and it's over 4 stores, 4 unique stores. That might be 4 unique vendors
or systems. Yeah. 100%.
So I think this is one of those. you and I can bemoan it, but it's not going anywhere.
It's not going anywhere.
It's not going anywhere.
It's been around for a long time.
It has been around. I do like the rent to own. People always say like layaway. I'm like, it's not like layaway. You're not old enough to remember. You couldn't take it home. And you're like, oh man, Mom, please. But for this, I think if you're going to do it, you got to really understand from the partner that you're working with, the Klarnas, the Affirms, the Afterpays. And it also depends on what you're doing. Like you said, if you're at a retail location, that's different than if it's, a larger item like a washer dryer versus a hot dog or concert tickets. So there's different clients and different companies for different purchases. And I think as the business owner, you want to make sure how that works. Most importantly, how you're getting paid is probably one of the biggest things. And knowing that, if for whatever reason that person defaults, how does that affect you, if at all, and where that goes.
Yeah. And I think you hit on it right there. The default nature of it. Right. So the question is, we'll get to it at some point. Is this a boom or bust sort of thing? Right. Well, the default nature of it is the defaults in this section are rising. Now, if I were to go get a loan right now, or even in the rent to own space, which I'm going to keep going back to that because buy now, pay later is just a version of that. It's been around for a while. They're going to check my credit. Right. And I have to give them certain pieces of information, and then they're going to check it and make sure I can actually afford it. Even if it's over multiple payments, they still want to know that I can afford it. Well, in the buy now, pay later space, they're not doing any background checks. They're not checking my balances. They're not checking my credit score. They don't know that I can actually afford it. And so now some of these companies are in a little bit of bind as defaults continue to rise on them.
Yeah, I agree. And there are a couple, or I think it depends on the industry and the price point. There are some certain providers do treat this as doing a background check, looking at certain things, looking at some sort of credit check. Whereas these micro ones that you might see at a big box store, they're just giving you them. You're in and out in 30 seconds.
Yeah.
I know AI is good, but it's not checking enough in 30 seconds.
No.
So I think that's something to think about. And I agree with you. I think it'll be time will tell. We've been talking about this on the podcast now for probably a year and a half, 2 years. It's still here.
Still here.
I don't know if anybody's made money on it. I know I should probably have researched that as the host, but nope. Let's put it this way. Nobody has had the headline BNPL company turns profit of $1 billion off of this. So I have yet to ever see that sort of thing. It's kind of like the day trader who is a billionaire. They haven't written that book yet either. So for this one, it's there. Are these companies profitable is a question. How does this fit into your business model? Are these the type of consumers that you're trying to attract or you are attracting? How do you drive sales? So I think there's a larger business decision here.
Well, I think that's a good point, right? Is a lot of times as a local merchant, you're having people come in and ask about this service, right? Do you have any buy now, pay later options for this, right? And being able to think through it, like you just said, are these the type of people that you actually want to sell to, right? Get into business with, because now you're in like a financial arrangement with them to make sure that they pay versus a one-time payment at the counter. So I think there's a little bit more to just saying, well, they're asking for it, so I should probably just implement it.
Yeah.
Well, I think that there are some ramifications for your business that you better make sure you're talking through.
Yeah. And it's interesting. The first two topics were very much in the business to business space.
Yeah.
This one's very much business to consumer. Because if somebody in the business space, like, I'd like to pay in 4, they're like, we can put you on terms and we can do an ACH or we can do these things. But they're going to be the ones who are going to be doing self-financing of a $50,000 or $100,000 invoice for whatever product you might be selling.
That's right.
So it's interesting that this is really specific more to the B2C space, whether it's online or in those retail locations. So if you do have that, it's consider, I think it's finding what is the bigger question, for your business model and does it work?
Yeah.
And know that not all providers of buy now, pay later are the same. So it's really do some research on what are you selling? What is the price point? Does it work for you? And is there one that suits your business model better than others?
Right. I think the worst thing that you can do in this situation is just say, yes, just add it on without considering what the price point is, How low do you want to go on to actually financing this? And, actively monitoring it over the first 3-6 months to make sure it's doing what you want it to do for your business, and that the default rates are as low and that it is an add-on to your business and not a drawback.
Yeah, I think that's with any good business strategy. You've got to give it probably 6 months and ask yourself, all right, we've done this for 6 months. Is it working? Is it working the way we intended? And if it is, then you know to keep going. If not, then you have the decision to make, is this really what we want to do?
Right. And can we pivot just for a tangent related thing?
You're the guest. You can go wherever you want to go.
I appreciate that. Right. Is payment plans, right? We've been doing payment plans in the space for a long time, or installment payments.
Yeah.
And now are we just calling them fancy names like buy now, pay later, or are they actually separate things? Working with software partners, I have a number of software partners that do installment plans.
Right.
If it's a big ticket item, they can pay X amount on a recurring payment plan until they hit that particular amount. That's been in the space for a long time. And you're not getting charged interest on top of those monthly payments, or you're not getting charged a higher ticket fee to actually do those monthly payments. Right. So I would once again question, hey, what's the purpose of adding this into your tech stack versus what your current software provider can already do in a card not present position? In a B2C, like we've been talking about here, it's just one more thing to think about.
Yeah, I think the B2C side, it's hard. It may be a new customer you've never had. You may never see them again. In the B2B space, I agree with you. The recurring and the installment has been there a long time. And typically you're not getting that unless you have a history. With the client, they know they're self-financing. Whereas for this, you get your $1.50 for that hot dog today.
I know.
And the guy's got to pay 37.5 cents. So I know I make the hot dog joke, but it is absolutely ridiculous in my mind that you can do this. And this is where we've come.
Yes.
Now, to go to the next point, the Consumer Protection Agency, the CFPB that watches this, politics aside, has been absolutely gutted since February, March. So oversight of this whole marketplace is at its lowest point.
Yes.
Or back to where it was before it was starting to be looked at.
Yes.
I think that personally, that might be something to consider, that there's really not a lot of, it's all self-regulated right now.
Yes. It is, for the most part, all self-regulated. Now, of course, as you mentioned, the CFPB was, set up and organized for this very thing, to create clear rules around buy now, pay later, credit transparency, fair lending, talking between some of the lending institutions. So we have a database that can be a singular place that people can check against credit for some of these things. And that's obviously not happening at the moment. So it becomes the question of who is actually responsible for the regulation in this space. And I can tell you that that's up for grabs right now.
It is. It's almost the corporate balance sheet is the one who's regulating, for right or wrong, where this will go.
Yes.
But yeah, I think that's part of the discussion around the buy now, pay later, rent to own. These are similar but different. There are safeguards for some, not others. Where is there protection for yourself as the business, for the consumer at large? I think it's something that we'll continue to talk about because it still is a big part of questions that we get when clients are asking us, but also, seeing where this goes. And it's not only here in the US. This is going to grow by close to 35% in Mexico. It's small in some of the other LATAM countries, but that is growing. So this is a thing where I think it's interesting, where this is something that has started, taken a foothold, is growing and continues to grow in the US. But now we're exporting this trend to other parts of the world.
Yes.
And it'll be interesting to see if those regulations get a little bit stricter in other countries or culturally how they work. I think that'll be interesting for me because I'm a bit of a nerd for this sort of thing.
Well, I think it's indicative of any type of new thing that hits the market, right? is that you want there to be transparency, visibility, standards for anything like this. And the payment card industry is one that is continuing to evolve rapidly, quickly. And we're learning a ton from our cousins across the sea in Europe that have adopted a number of these things before we do here in North America. And so having an actual functioning CFPB, not just in the buy now, pay later space, but as we get some additional trends. I know we may talk about some trends here at the end of the podcast, but this is super important for the space as a consumer.
Yeah. And it's really one of the biggest questions that we get driven, and I'm sure you hear about and look for from our clients. When I get to the checkout, how do I convert that person getting to that page and actually checking out? I don't want to stand in the way. Yeah. Most people go to a site now and they see, just pay by credit card. And you're like, wow, this feels old versus pay by credit card. Do you want to pay by this wallet or that wallet? Apple Pay. Do I show my face on my phone once I hit the button on the computer? Can I buy now, pay later for this? Can I go for that? Can I get the Gap reward card to go with the Banana Republic thing? So all of this is really, the customers that we have say, I want to break down every potential barrier to convert that sale.
Yes.
And this is one of those that you look at. The others, implementing the wallets, it all comes back to a credit card. But it's the easiest way to hit the button and pay for that credit card.
Yes, as frictionless as possible.
Yeah. Is that something that, is there anything out there that you're seeing that, is changing this a little bit? Or is it really, that's the question? How do we make this as frictionless as possible?
I think it's how we make it as frictionless as possible.
Yeah.
And they're counting the clicks. So if you're online, you're buying something, they're counting the clicks. They're counting how long it takes for you to add something to your cart, how long it takes for you to check out from your cart. All of these things are becoming data points that are informing what's the easiest way to do this? How do we eliminate the holdups? How do we make this as quick and painless as possible across a variety of things?
Yeah, no, I agree. And when you don't click, I always get a little concerned when I get that email. Hey, you still got something in your cart.
Yeah.
You still want to buy that?
Well,
they're like, how do they know? I was checking out as a guest. How do they know?
They know all these things.
The phone listens to me now that the computer cart is watching me, and my children still don't listen. I don't know what to do, Trey.
Well, there's no help coming, Joe.
No.
If you thought a thought and you put it out loud into your phone or into your computer, it's out there and they know it, and they're going to remind you of that thought.
I still keep saying 7 lucky numbers and nothing appears. I'm a little upset with the lottery.
We'll have to figure out how that goes.
All right. Rapid fire. Next. What's next in payments? Couple of topics. For you, an emerging technology or payment model to watch.
I think we're going to see, I'll throw some things out there, but then I'll kind of dig in on one. I think we kind of see in the ACH world, the FedNow, the real-time payments, being able to transfer funds immediately on those rails. I think we continue to see advances in that space and demand in that space. I think we see AI come into the fraud prevention side more heavily. Being able to aggregate all of those levels and pieces of data into a customer profile that fits your model profile, your ideal customer profile that you want to sell to. I think we make major improvements there with the use of AI, just because there's so many different data points there.
I like your fraud answer. I hope that it comes sooner rather than later, and it's actually affordable, because I feel like a lot of the fraud prevention, when we get asked about it, we quote the fraud prevention, and clients are like, come on. They say, you've got AI now. So I think I agree with you. I hope fraud really comes and it becomes something that is something for everybody to use, and not just the massive enterprise businesses. One I'll throw at you is the wallet pays with it's a version of Zelle for online amongst the largest banks. I think that is one type of wallet that is going to, I think, start to grow, because the banks are starting to grow and broaden that as well which I think will be interesting to watch.
Yes. We'll throw that under a category of digital wallets 2.0.
Yeah.
There's a ton of stuff that goes into that.
Yeah.
Where it's almost replacing banking in some ways.
Mm-hmm.
As you have your wallet, you can see all your transactions within your wallet. You can do transfers from that wallet to other accounts that you have. It becomes a one-stop shop where the wallet is more important than the banking app that you used to have and used to use all the time. Yeah. So I think we see continued evolution in that space. I think one other one that I think is kind of fun that I want to touch on is, and not to go into politics here either, right? But we've had a ton of movement in the crypto space over this last year, right? And crypto's been around for a moment, right? But it's been more regulated over the last couple of years. And as we've seen some legislation pass already for that this year, but it's become more widely acceptable, especially under this administration. And with the crypto side of things comes the blockchain technology and things as well. So as it relates to payments, one thing that's super intriguing to me is programmable payments with smart contracts. And so what I mean by that is the smart contract, you have to meet qualifications in order for the payment to click off, to go through. So when we look at some verticals, legal, property management, real estate, some MCC codes or specific verticals that have timing elements of the transactions, right? Can we set it and forget it as long as it meets these criterias, which is all transparent in the blockchain technology? So I think we're going to see some more evolution about, and I also see it in the gaming space a little bit as well as, hey, if these are my teams, these are my guys, right? If they meet at some point, I'm always going to lay money on this or this person or that person. I'm going to put the bet in. They're going to meet in October. That bet will fire off in October, right? Different ways to manage some of these, what I'll call smart contracts with programmable payments that are built into it. I see that on the rise too. And that's kind of a fun one for me to think through.
Yeah, that's definitely test pilot stuff when it comes to payments. Like they're on the edge. I think the blockchain technology and the technology behind some of this crypto stuff is needed because we're dealing with older technology, and that's hard. Like to really take the federal banking and global banking and transform the technology that's been there since the beginning,
a long time,
is not easy for a lot of reasons. I mean, you're trying to move a lot and make it secure. The crypto part of it, I feel like I'm on my porch. Someone's got a coin named after them. And I'm a little disappointed nobody's come up with Shroot Bucks yet. So there's obviously nobody in crypto is a fan of The Office, because how is Shroot Bucks not a coin?
Why?
Or Shroot coin? I don't know.
Listen, you heard it here first.
I mean, beats. Let's go. All right. One thing merchants should do today to stay ahead.
I think you got to constantly be auditing it. Payments is not just a throwaway for your business. It's a major line item of your business. And I think a lot of people just treat it as a throwaway because it's just one step towards the overall process, one step in the overall process, right? Your main thing, you're marketing your stuff. You're managing your inventory, you're managing your personnel, and all those things seem to come before taking a look at your actual credit card statement and seeing if you're actually getting billed what you should be getting billed, right? And see if you're qualifying as you should qualify, and seeing if your rates are where they need to be compared to competitors in the space. So I think the biggest thing an individual merchant can do today is to actually pay attention to their credit card stack, to their industry, fees, fraud tools, authorization rates, all of that, and be talking with their provider on a regular basis.
I agree. I think it hurts when I hear from people, we haven't talked to somebody in 2 years, or we can't even get a hold of them, or all we have is an 800 number. I think, if you're in business, this is another place you should have a strong partner, because the rules are changing twice a year from Visa, MasterCard, Discover, Amex. The card brands are changing the rule. Now, 9 times out of 10, they won't really impact your business. But when it does, You want someone there to help you get ahead of it and know what's happening and know that there's new technology out there to help the clients stay ahead of it and make those decisions. The other part of that is if you are going to make major technology changes, understanding how that might affect your credit card processing. Will you have to change it? Will the gateway be new? Will the gateway even be available? How will that work? So yeah, I agree with you. It's auditing the pricing and all that, but have someone that you can at least have a phone call or an email with,
right,
to be your support person, because it gets complex.
Yeah. And I think even if it's only twice a year, you mentioned it earlier, Visa and MasterCard are going to change their rates in the spring and fall every year. That's their cadence, right? And whether you know this or not, you're actually getting notified of those changes by your processor, right? Yeah. But it's going to come on your statement, the one that you're probably not looking at.
Right.
Right. So even if you make it a habit of twice a year, spring and fall, just ringing up your partner in the space saying, hey, saw these new changes come through. I sure as heck don't know what they are.
Right.
Can you talk me through this situation? And by the way, is there anything new in the space that, would apply to my particular business?
Yeah.
Anyway.
And some of those changes, nobody can do anything about.
That's true.
But you should know that if you're doing level 2, level 3, Visa's now charging 5 basis points. And no one can do anything. But at least you know.
At least you know.
That surprise.
No. So you know why your bill's going up.
Exactly. All right, last question. Lightning round prediction.
Oh, dear.
Will buy now, pay later bust or boom in the next 2 years?
I'm going to go with neither. I know that wasn't the option. Sorry.
I feel it'll whimper.
Oh, sorry about that one. I don't think it's going to bust because I think this is, like I said, rent to own, man. This is going to be, if you make it easy for people to pay less for something at the point of gratification, they're going to do it. So I don't think that's going to go away. I think I will even go so far as to say, as Americans, that's something that we like and something that we won't do away with.
I feel like it's going to be a team that you cheer for. It's not the worst in the league. It's definitely not in the playoffs.
Yeah.
They're in this purgatory and you're just like, but it is what it is.
They're in the playing game every year.
Not even are they close? And they're like, if they would have done this in September, we'd have a conversation in January. I feel like buy now, pay later is just this like thing in the room that you just deal with.
Yeah.
And it's not exciting.
Right.
It's more of we got to talk about this.
So bust, I don't think it's going to bust.
No.
I don't think it's going to boom either.
No.
Because I think at some point, the regulatory committee is going to get their act together and actually enforce some regulation in this particular space. So I think it's going to continue to climb, but I don't think it's a boom. I think it's going to be, just like you said, steady player in the back of the room that just wishing the teacher would call on them sometime.
This guy's still here?
Yeah, I don't know.
Trey, thank you for taking the time to be with us. To everybody else, thanks for listening to the Lessons for Tomorrow podcast. Find out more about AmericanEagle.com's services and today's topic in the description below. Like, comment, subscribe, and share this episode with others. I'm your guest host, Joe Campagna.